Good afternoon, ladies and gentlemen. You're listening to Financial Survival, sponsored by Discount Gold and Silver Trading. I'm Melody Cedarstrom, and today is Friday, the 16th of January, 2009, and thank you for joining us this afternoon. And again, this program is brought to you by Discount Gold and Silver, 1-800-375-4188. That's 1-800-375-4188. Visit our website at discountgoldandsilvertrading.net, discountgoldandsilvertrading.net. And folks, the email, direct your questions to discountgoldandsilver@yahoo.com. Discountgoldandsilver@yahoo.com. We've got one question in so far, so folks, hey, we need about, how many do you want, Bob? 10?
Yeah.
We need 10 questions today.
Yeah, 10. We need them. I don't have any either.
So send them in.
Our listeners are falling asleep at the switch. We can't have that because we can't have the program without your help.
There you go. And discountgoldandsilver@yahoo.com. And before we get to Robert, let's just see what gold has been doing today. And it's up.
Terrible day.
Terrible day in gold, isn't it? Awful.
Yeah. Up 33.30 in the outside month at 840.60.
Yes, isn't that awful? And silver in the outside market?
I have to wait for another turn, but I want to say this. We told you that this market is unusual, unpredictable. And we had the price down here the other day. We said, buy. And, both on the coins and the shares. And, it turned out to be exactly right on the money. You can't figure these markets. Nobody is that smart. And when you get the government in rigging everything, you've just got to buy, go long, and stay long. And it's proven to be a winner over the last 8 years. And you just keep on, getting these capital gains on paper, so to speak. And either one or two things are going to happen. Either you're going to cash out big time, and I think that will be the case. Well, the worst possible case is that when everything else goes down 60, 70, 80, 90%, your gold is going to hold its value. You're going to be able to keep your assets intact. You're going to be kept out of harm's way. That's really what this is all about. So think. Buy. Call Melody. You've got to get in the game. If you are in the game, come in and pick these spots when we have these little corrections and buy some more. I mean, we've told you the same thing for 5 years, and we've been right.
And we have silver at 11.
Silver, 11.24, up 80 cents.
So spot 11.31. And platinum was up good today, up 24 at 9.53, and palladium was up 7 at 1.90. So green all around, and it is amazing. You had the Dow. It's just amazing that the Dow. And I know it's the government in there doing it, but it's amazing that they can do it. With the horrible news that is out there, the reports that are being released, and the number of people with Circuit City going under today, with 30,000 people that'll be getting looking for new jobs here in the very near future, and it's amazing that they were able to squeak out a 104 plus. I think that's what it was. I'll have to go to the right screen, but the last time I looked. And we do have Robert Chapman joining us this afternoon from the International Forecaster, as you heard him a few moments ago. Good afternoon, Bob.
Good afternoon. Very good day. Interesting. Most everything's up all around. We have LIBOR at 0.36 and at 114. 0.36 is the 1 month, and the 3 month LIBOR is 114. The 2 year U.S. Treasury bill is yielding 0.73, and the 10 year is yielding 232. Both are pretty close to yesterday's closes, which were 72 and 221. Actually, the long bond, the 10-year note, was 221 yesterday. On a percentage basis, they call them VPS. We're looking at a 11-point move upward. That's a very large move. I think the Fed can pretty well handle the short end of the market under 2 years, but they're going to have a hard time handling the long-term paper and trying to keep the yields down. And that's the most important in the market, the longer yields. The Dow, let's see, 54, 59. S&P was up the equivalent of 59 Dow points. Dow was up 69 points. I'm doing a calculation. We had an upside of 104 points on NASDAQ. Those are equivalent points. I use a formula, and I turn them into Dow points. So we have the Dow up 69, the S&P up 59 equivalent points, and we have NASDAQ up 104 equivalent points. And the market has kind of fiddled around in that area all day long. There's option closure today, and so usually it's far more volatile than what you've seen. It was a pretty calm day considering. The actual Dow itself is 82.81, and as you heard me say earlier, gold has been flipping back and forth from plus $34.20 to $34.70, and silver's up 81 cents. And at the halftime, I'll get you the closes of the three big gold stocks. But anyway, one of the other things that I want to mention is that the currencies versus the Dow was strong today. The yen was down a little bit. The pound was up moderately, and the euro was up. I'd call it strong to semi-strong, or a little bit stronger than strong. How's that? And what do you have on the USDX, which is the dollar index?
Showing it down 0.49 at 83.97.
Yeah, they gave up the gains from yesterday.
Yes.
Anyway, that's kind of a capsulization. I think Wall Street has been realizing over the last several months, we're not saying anything, that, gee, we've got to change our attitude towards what we're investing here, because this is really the dreadful news that we're getting. I mean, the creation of a budget deficit this year, probably of $2.3 trillion. Now, that's kind of a guess. I know we're going to get somewhere between 1.3 and 2 trillion. But I did the numbers, and I think we could get as high as, gee, gold just jumped again, up $35. I think we could get as high as 2.3 trillion on the budget deficit. The amount of money that, now you got to remember that the money is being loaned to these banks to keep them from bankruptcy, and all the majors are bankrupt, both in the insurance industry, financial industry, and in banking. And they're not going to tell you that. I mean, a year and a half ago, everything was fine, and look what we've seen in the meantime. So I think that we're probably going to be 12 to 13 trillion on loans to different entities most of them internationalist conglomerates or big banks, big brokerage houses. And I think that that's a very doable figure. It could be higher. The following year, we're looking at $20 trillion easy. And as far as the $825 billion stimulus package, I would say that, WellPoint just cut 1,500 jobs, 3.6% of their workforce. That's terrible. I would say that this stimulus package